gamma risk in zero DTE options. Gamma risk in zero DTE options. I mentioned something to Bat this morning. I said, you know what? There's a lot of there's a lot more gamma risk in zero DTE options than there are in 45-day options. How much more, you ask? Well, about 45 times more. But we're going to get to those numbers. We're going to see how you do that. Doesn't mean there's anything wrong with it. It just means, hey. And remember, we'll look at gamma.
It is what it is, right?
Yeah, we'll look at gamma risk today. Let's go to the next slide. So last week we showed.
This is what everybody always, sorry to interrupt. This is what everybody always talks about when you're selling options or trading any options. Your gamma risk. So
what does that mean? It means you have 45 times more risk than you have if you go 45-day options. That's basically it. Right. But every Thursday at a little after 9, we do a market measure on zero DT options. So enjoy. Last week we showed how zero DT options carried roughly 100 times the theta decay as a typical 45-day option. So this was the example we showed last week, which was that if you look at SPX zero DT options compared to the 45 days, we broke it down into different time frames. And we said from 8:30 to 10:40, because it's zero DT, that we have to break it in time frames. From 8:30 to 10:40, from 10:40 to 11:50, and from 12:50 to 3 o'clock. These are central time. Every 2 hours and 10 minutes, that's your 6.5 hour trading day. We're going to take a look and see how the at the money straddle decays per $1 of premium. And you can see that basically it's 100 times more than, on average, it's 100 times more than the 45-day options. 0.3 of a cent versus almost 30 cents on average. Okay, so it's just 100x. Let's go to the next slide. So since we know that gamma is the balancing scale to theta, how much greater is the gamma risk in zero DT options? How fast do they move? And so how can we protect ourselves from the risk? Hold on a second. How do you think you can protect yourself? There's only really one.
Size is the only.
Okay, well, assume size is a given, okay? So you protect yourself with size. Okay. That's your first given. Next thing, how can you protect yourself outside of size? Knowing how fast they move.
Don't know other than size. I mean, strategy. I mean, I guess you can, an SPX options to be short. You're more than likely going to be spread. So you're not using as much buying power as you would for a naked option. That's 50, 60, 70,000.
The answer I believe that we're going to get to here is the way to protect yourself from risk is you can't let things go to the end of the day, because that last. Can you go back one slide, Beth?
You get the direction wrong on the opening. And
you get the direction wrong on the opening.
70, 80% full loser right on the opening.
Well, it's going to be something. But look here. Look at that last 2 hours and 10 minutes. That's where you have most of the decay. So because that's where you have double the decay, you're going to have double the risk there. Let's go to slide 3.
That's fair.
So we did a study. We studied the at-the-money straddle and the at-the-money butterfly with $3 wide wings in the SPY. Now, when I trade this, I tend to do $30 wide wings in the SPX. $3 wide wings in SPY is the same thing. Okay, just so you're clear. So we just changed the study up to the SPY, but $3 wide wings in the SPY is the same as $30 wide wings in the SPX. We recorded gamma as a percent of the option value throughout the day. So the same thing, first third, second third, third. Each in 2 hour 10 cents, just increments. And we used the above study on the following options: zero TT with average expected move, 21 days with average market implied volatility, and 45 days with average market implied volatility. Okay? Let's go to normalize everything. So if the SPY moves $1 from the open in the first 2 hours, your gamma risk is roughly 45 times the 45-day risk, and the 30 times the 21-day options. That's where we would normally, manage the positions. So gamma risk increases by 5% as you get into the afternoon for zero DTs. That is the real key here. It's 5 times greater. So gamma risk in that last 2 hour and 10 minute that segment, your gamma risk increases by 5x. So here, take a look at this. This is really interesting. So this is the at the money straddle in the SPY, but SPX is the same thing. On the 0 DTE, in the first hour, it's about 10%. In the second hour, it's about 22%. In the third hour, it's 50%. So for the first of 2 hours a day. So for the first 2 hours a day to the last 2 hours of the day, it's 5 times greater in the last 2 hours. So if you want to do anything, because people write to us all the time, they go, what time do you manage? What do you do? Well, clearly, after 1 o'clock, you're dead.
Well, yeah,
you're dead, or
you're subject to price.
Yeah, there's nothing you can do after 1 o'clock. Mm-hmm. So if you're going to do something, you want to do it in the first 2 hours. Or
you got to remember the price is going to be lower in the last couple of hours too. So if 50% of what's left is going to be a much smaller number, in my opinion, than the first 30% that you're looking at between 8:30 and 12:50. I mean,
agreed.
Okay.
But you can see here that if you're going to do something,
you better decide what you're going to do early morning. Like if it's not going well for you, you have to say to yourself, okay, I'm going to be looking at a full loss, or it's going to come back in somehow back to unchanged or make money, whatever.
Yeah, but if you're going to take a loss, you want to take it in the first 2 hours.
You got to decide. You have to have your game plan already.
Just know that your risk in the last 2 hours is 5 times greater than your risk in the first hour, in the first 2 hours. And then if you look at it, compare it to 21 DT or 45 DT, now you know why we do the other things, which is, extend the duration to 45 DTE just to keep ourselves in the ball game.
Yep.
Okay. And
it's feast or famine with 0 day options.
Yeah, it's feast or famine. Yep. But you can see over the course of the day, the numbers change dramatically.
Yes.
Okay. As the hours go by.
Yep.
Let's go to basically the risk doubles every hour. By defining your risk in 0 DTEs, you can reduce your gamma risk by 50%. So we do a butterfly, it's 50% less gamma risk than if we did a naked option, because the naked options are really crazy.
Can I flip the coin for a moment?
Yeah, sure.
What about placing an order if you're looking to sell options, meaning selling spreads in SPX because of the buying power? Would you think about placing an order later in the day, last third, last half, than you would the beginning of the day or the first half of the day? If they're going to contract a lot quicker, obviously towards expiration, it contracts a lot quicker, as we're showing here, and I think most people who trade options know. If it's gonna be bad to hold, would it be good to sell?
I don't think so.
You don't think so? Taking into consideration that your risk reward is going to be so much greater, right?
I mean, you can try
a lot more.
You can try
for a lot less.
You can try. I just don't like the. I think it's impossible to manage. It's a pure crapshoot. Yeah. Mm-hmm. But anyway, you can see here the point of this slide is that if you do a defined risk trade, you reduce half your risk, half your gamma risk. So if you do undefined risk, you have twice the gamma risk. If you do a defined risk trade, you have half the gamma risk. But that's in the first hour of the day. So if you go home with a position overnight, you'd rather have defined risk because you have half the gamma risk. Late in the day, it doesn't help you as much. In other words, you have butterfly on late in the day, it doesn't really matter whether it's defined or undefined. Okay, meaning a ratio spread of butterfly are going to move the same. Mm-hmm. This is probably the best 0 DT discussion we've had so far, because this has the most useful information in it, I think. Just about where real risk is. Let's go to the next slide. So the takeaways: gamma risk is roughly 45 times higher in 0 DTs than the 45-day cycle. And by defining risk, there is a significant reduction in the 0 DT gamma in the first hours of the day. This is the reason we take 0 DT butterflies off before the afternoon. That's exactly right. But also just remember, the third bullet here is that there's 5 times more risk in the last 2 hours than there is in the first 2 hours.
Good job. Good job out of you. Explain it. Good job by the team. We're going to take a quick 90-second break, come back. We've got Joy, your friend and mine. Mr. Scott Sheridan, Tasty Trade World Headquarters next.